All right, guys. So you're welcome to the live trading session organized by the one and only 10 Trade. And the whole essence of what we're doing every Mondays and Wednesday is so that as a community, we can analyze the financial market together and then possibly spot out profitable zones that you can trade off from. Okay. So this is a new concept that we just started. So every Monday, 6 p.m. Nigerian time, and every Wednesday, same time, we are going to be converging via Zoom like this, and then we just analyze. One thing that really help improve your trading game is when you have a community that you are a part of, and most importantly, a community that you trade with. So it gets you inspired in a way, and it has a way that it helps you improve your game, right? So you'll be learning from me and any other trainer that comes to analyze for you. And then most importantly, it also helps with accountability, all right? And also, another reason why this is very, very important is that you have the avenue to ask your questions. So let's say you made a trade during the week and then maybe the trade, you thought it was going to go your way, but it did not go your way. We might be able to provide good answers why the trade did not go your way so that you can learn from that mistake and then ultimately you get better, right? So that's the essence of why we are doing this every week. So ensure that you take full advantage of these live sessions. All right, so you are a part of this because you're a client, you are a 10 Trade client. All right, so if you were here on Monday, remember I told you about the economic news happening the whole of this week. And then yesterday we had the CPI news on I think majorly USD pairs. I got a lot of messages from people in the community telling me that they were hit, so trade hit their stop loss. Give me some feedback, guys. Who traded this week and how did your trade go this week? Did the news favor you or did not favor you? Let us start with that, and then before we go into analysis, Mr. Denny, Mr. Christopher, Mr. Favor, Humphrey, listen, who traded this week? And how has trading been this week for you? If you made money this week, you can just let us know in the chat box, or if you lost money this week, let us know. It's okay to make money and it's okay to lose money. The important thing is that we learn from it. So I'm asking this question so that I can know the best way to make this lesson a bit more customized and personalized for you. All right, so I'll just wait for a few more seconds. If I get a response, I would answer. Mr. Humphrey said, I traded this week. I made money, but lost it on Tuesday due to the news. Okay, good. So I'm guessing, I know you only trade GBP USD. So I guess it was GBP USD that took you out. Okay, that's good. Who else traded this week? Mr. Peter Kayombo, Mr. Sunday Patrick, Mr. Peter said he lost money this week. Okay. How about Christopher? Mr. God's Power, did you trade this week? Mr. Christopher said, I traded this week. I made money yesterday. Awesome. Congratulations to you, Christopher. Mr. F. Young said, I didn't place any trade. Good for you. It's better for your capital to remain intact than for you to lose it. All right. Favor said, I didn't trade this week. That's good. Mr. Denny said, volatility hits me hard. My stop loss was bypassed and I was taken out. Yeah, it happened. The news was very, the move was very crazy. Mr. Gospower said, yeah, I lost some and win some. Still a break-even week. Fantastic. Good. So let us just now that we have 2 days to go in the week, that means there's still chance for possible recovery. Mr. Sonny Patrick said, I'm just a newbie, still in the process before entering a trade yet. Good, please take all the time you need. The market will always be here. So ensure that you are well skilled before you put your money on the line, okay? So I was saying something, I forgot my train of thought. Can somebody remind me what I was saying? Yeah, I was saying that we still have 2 days to go. So let's say we are done with today. So we have Thursday and Friday to go. Let us check the economic news for Thursday. Let me go to Forex Factory, and then let us check out possible moves that's going to happen tomorrow and Friday. Hold on, I'm going to share my browser in a bit. Let me just load that up. Give me a second, guys. So when we checked the news on Monday, we saw that Thursday is also going to be quite a busy day when it comes to moves in the market. Hold on. So this is Forex Factory. I think we should be able to see my screen. Good. Yeah, that was just showing. So this is Forex Factory. And then what I've hold on. So I filtered this to only show me high impact news. All right, so today is Wednesday. Yesterday we had CPI. This is what took a lot of people out yesterday. Okay, we also had a bit of CPI on GBP today, this morning. Okay, so possibly this night as well, we might be having some crazy news. We have the FOMC happening tonight. But look at what's going on tomorrow here. A lot of folders for tomorrow. Okay, we have high impact news on USD, Euro, GBP, CHF, AUD, and NZD. So from the Asian session, we should start having some really nice moves happen. Okay, so and then we also have the same thing for Friday as well, Euro and GBP. So we still have a lot of opportunities. So even though you've lost a bit of money in the last 2 days or yesterday, right, there's still opportunity for recovery. But very importantly, if you lost money in the last 2 days, the mindset that I want you to have is not the mindset to take revenge in the market. No, don't try and revenge. You cannot take revenge on the market, right? The market is bigger than you. So the best thing that you can do is to stick to your strategy. Okay, don't do anything outside your trade plan. And then most importantly, you want to shift your mindset in trading to react to the markets and not predicting the market, because the major hole that a lot of traders find themselves is them trying to force the market to sell or for the market to buy. So probably based on your analysis, you expect that currency pair to sell, but it's not selling. But you are bent on ensuring that this thing should sell. And what that is doing for you is you are closing an opportunity for you to enter another trade. Possibly is just trying to buy, but you have a different perspective. And that is for people that try to predict, right? You cannot predict the market based only on technical analysis, right? So if you want to predict the market very, very accurately, then you need a good balance of fundamentals and technicals, right? But if you're only checking technicals like we are doing, the best thing that you want to do is to react to the market, right? So have a fluid nature towards your analysis. Be open to changing your perspective regarding your analysis. Okay, I hope that makes sense to you. I know that when I was studying out, I also found myself in that situation that when I decide that price is either in a supply zone or resistance that some people trade, I don't want to see any other thing than a sell setup, right? So I fail to see another thing than a sell setup, and then possibly price might just choose to buy. All right. So have an open mind towards trading, be fluid as much as possible, so that you can take advantage of a lot of trades. So let us start from, let's check out the dollar index and then check out what the dollar is, how the dollar is doing. So let's check out DXY. Okay. So this is DXY. Let's go to a higher time frame. Let me delete all of this. So DXY on the monthly. So DXY is the US dollar currency index. An index is just a bunch of parameters or metric indices that helps you figure out the strength or weakness of a particular instrument. In this case, it is the dollar. So every currency has its own index. You have the euro index, the pound index, the CAD index. So this is the dollar index, DXY. So now, why do we check the dollar index? To know the strength of the dollar. If the dollar is weak, that means currency pairs where the dollar is the base currency, we should be expecting a sell. If the dollar is strong, currency pair where the if the dollar is strong, currency pairs where the dollar is the quote currency, we should be expecting a sell, and currency pairs where the dollar is the base currency, like USD CAD, we should be expecting a buy, and then vice versa if it's weak. So check what's going on USD on weekly charts. Let's mark that up quickly. Now, what do we have here? We have uptrend like so, all right. And we have this zone right here. This is a higher low that has been violated here. This is another structural zone in the market. And then ultimately, we are seeing price violate this zone right here. Coincidentally, price is also in a block of demand here. So this is a demand zone on the weekly chart. All right. So on the weekly chart, price is in a demand zone. All right. So that means very, very soon, if this demand zone will hold this move very, very soon, we are expecting the dollar to pick up. Okay, so the dollar soon should gain some amount of strength, right? And then check out this. We've also seen some form of liquidity grab happen here. Now, let me delete this. This is the first mitigation over here in this range of demand here. And then we are seeing price go down and take out liquidity. And then everything is happening in this demand. All right. So we have seen liquidity grabs in the last 2 or 3 weeks. The GBP US, every euro, every USD pair has not been profitable, most times for retail traders, because it has been taking out people's stop loss. So a lot of stop hunting has happened the last 2 weeks or last week. A lot of liquidity grab is happening currently. So, and usually after a liquidity grab, usually we should be expecting some move. Okay, so we should be expecting the dollar to pick up shortly. We don't know when. It might be next week, it might be in 2 weeks' time, but ideally, price is in a demand on the weekly. So let's go to a more precise time frame that will show us what can happen in the short term. So knowing this, let's go to the daily time frame. All right, so daily time frame, what can we see as well? Price is still bearish, as you can see. So that means the value of the dollar is still very, very weak. Okay, so the dollar is still very, very weak. That is why GBP USD, Euro USD is buying. Okay, so dollar is weak right now. As you can see, let me mark that out clearly. You can see. So this is a structure on daily, okay, downtrend. So if you are taking a cue from the daily, how do we know? Congratulations, Mr. Humphrey. That's a good testimony. Now, how do we know that price is ready to shift from bearish to bullish? This zone right here needs to be taken out, this lower high right here. So how do we know that the dollar, or let's take this immediate level here, okay, if you want to be aggressive, how do we know that the dollar is about to shift to gain some strength? We need to see price break out of this zone, break this zone, all right, and then possibly we'll see a retracement like so, like this. If price should do this, this is a sure sign that money is coming back into the dollar. But right now, based on the daily time frame, the dollar is still very, very weak, and that's why we are seeing those kind of movements on US pairs. If we go to the 4 hours, we are seeing the same thing on 4 hours as well. Price is still generally in a downtrend. So right now on Euro USD, on GBP USD, the dollar is still going to be going all the way up. I mean, the pair is going to go up because the dollar is not strong enough to push price all the way down. Make sense? Good. So knowing that, let's check out a few pairs and then possibly what we might be expecting during the week, during the rest of the week. So let me remove all of my setup here. Give me a second. I want to delete this. Okay. So let's check out Euro USD, and then please type in the chat box the pair that you would like me to check out for you. Possibly you have a particular pair you want to look at this week, and then we'll check it out together. But let us start with Euro USD this night. So Euro USD this night. So Euro USD, let's go on the weekly chart. Give me a second. Let me remove this alert I set. All right, so Euro USD on weekly, price is still generally bearish. Okay, price generally bearish. And then we can see this move here. And what are we seeing on Euro USD on weekly? Price is, this is an impulse move. And that impulse move is taking out these zones right here. It's taking out a lot of lower highs. It's taking out this zone. That's taking out this zone right here. Okay. The next zone that it might take out to be this zone. Okay. But ultimately, this zone, like we said on Monday, is a supply. This is a range of supply right here. Price is in a supply range. Okay, so in this supply range, this is a weekly supply. And in this supply zone, what should we expect? We should expect price, we should look for opportunity to sell, right, in supply. And then that sell would also bring in place the corrective move that this move needs to have. Remember our concept of trends, right? Trend is impulse, correction, impulse, right? So right now, this particular move has made an impulsive move. So expectational order flow, we should expect price to form the correction sometime soon. All right. So, and then we know what drives the market. Supply and demand is what drives the market. Okay. And then fortunately for us, price is in a supply level. And a lot of times what happens in a supply zone and demand zone is a lot of liquidity grabs before the real move happen. Now, if you are looking at this range of supply here, we have seen just one liquidity grab so far. Now, this is, let me make this bigger so we can see. Now, this is just based on the weekly. This is the first grab that we've seen here. So price came soon and was going down, that red candle, and then ultimately, what do we see? We can see this move up, taking out liquidity, right? And then this liquidity grab is still in the supply, weekly supply, all right? So, and then here, prices are the extreme as well. So anytime from now, if this supply zone will hold, it makes sense. If we see an opportunity to sell, we should take it. Okay, so that's just what we have on weekly. So let's go to the daily time frame. So if we are going to sell on lower time frame, we must be sure that the order flow has shifted to bearish. Okay, so let's go to the daily chart and check out the market structure on daily. What is the market structure on daily saying? Price is in a very, very strong uptrend. Okay, so price is in a very, very strong uptrend, as we have seen. All right. So right now on Euro USD, it wouldn't make a lot of sense to look for sales yet based on this daily. We know that price is in a weekly supply, and then we are seeing a lot of liquidity grabs in that supply level. And then the other flow, the market structure is still telling you that Euro USD is in an uptrend. In an uptrend, the best thing that you can do in an uptrend is to look for an opportunity to buy. All right. So the best time to look for sales will be when you see the order flow shift from bullish to bearish. So let's see if we can find that on the 4 hours. Okay. So right now, even the 4 hours has not given us a sell scenario since, all right, in this zone. Best scenario of what we have is a continuation of the uptrend, like so. Okay, so the best thing that we can do on this, on Euro USD, is to look for buy scenarios, possibly. All right. So right now, based off of what price is printing right now, we need to wait for price to retrace into a block of demand here. All right, so we have a demand level here. If price does not break above this zone to create a higher high, then it makes sense to wait for price to retrace into this zone. If price retrace into this zone, then you want to check out on a lower time frame additional confirmation for a buy, and then we'll continue all the way up. Okay, so that is what we should wait for on Euro USD. There is no setup for a sell yet, even though we are expecting a sell on these pairs. Market structure has not told you to sell yet. And for me, I like the 4 hour time frame. If the 4 hour time frame, that's the time frame that I use to define my higher time frame point of interest. So if my 4 hours doesn't tell me to sell or buy, I don't go to lower time frame to sell or buy. Good. You have been bullish on your USD. Awesome, right? So that means your call has been very, very correct. Toma Barry, that's awesome. All right, so you want to wait for price to retrace into this zone, and then you look for buy setup. So what I'm going to do is I'm just going to come here and set my lat. Okay, so I'm going to create my alert here. And then what you want to also watch out for is, like I told you on Monday, you always want to watch out for liquidity grabs. So when price gets into this zone, for example, at the first touch of this zone, so let's say you now go to your lower time frame and then you plan to take entry. You want to take entry after you've seen liquidity grab. Don't take entry. Don't be the first to take entry at a demand zone or a supply zone. You want to always wait for a liquidity grab in a demand zone or supply zone before you take entry. So this is what I think price is going to do when price retraces into this zone. But mind you, this is on the lower time frame. So I'm assuming that when price retraces into the zone, at the first touch of this zone here, you now want to go to your lower time frame. Now, on your lower time frame, you want to wait for other people to enter the trade. So you find something like maybe like a W pattern or something. So that will lure people into the trade. So you will not enter this at all. So you want to wait for price to come back down. And what you want people's liquidity to be grabbed. So once you see liquidity grab that has happened, you now want to enter with your entry system. A lot of times your setup would align after a liquidity grab. So if it aligns, it's a good time for you to look for buys. Make sense? Yes, your account officer will reach out to you and also possibly send you to the group, Mr. Tom Barry. That's a recording. Guys, let me know if you understand our analysis on Euro USD. This is what I think is going to happen on Euro USD. Or otherwise, we might just see price break this zone. Let me delete this. Otherwise, what we might see is that we might see price break this zone. Price might break this zone. Oops, give me a second. Price might break this zone and then start going down. Who knows what price is going to do? Or we might see price create a higher high like so. Price might create a higher high like so. Once that happens, okay, so we can now easily call this structural zone in the market. So this can be your higher low. And then price might come down, break this higher low, retracement, and then price will start going down. Okay, now we are anticipating a sell. Why? Because of the weekly. Because of the weekly. In the weekly, we've seen a lot of liquidity grab here. This is the first. We've seen one liquidity grab here, another one here like so, another one here. All right, so we've seen three grabs of liquidity in the weekly time frame. All right, so and then when you take the swing structure, give me a second. When you take the swing structure of Euro USD using Fibonacci, let's use Fibs from this swing structure, this swing high to this swing low. Give me a second. Okay, so price is retracing towards even beyond the 73.6. All right, so this is a zone where a lot of people supplement by the hit or something. So this is a good zone to wait for price to get to. So we should expect some form of retracement here. And then why are we also expecting a retracement? Because this has been an impulsive move that has taken out this trend line liquidity here. And then based off our knowledge of trends, we are expecting a proper correction. So price should correct itself shortly. So that's why we're expecting a sell. But if you don't get a sell set up on lower time frame, all well and good, price might just continue going up. right? The market will do whatever it wants to do. But before it does what it wants to do, it will always leave footprint. So like I told you in the beginning, you don't want to be on the predictive side. You want to react, okay? So be fluid as much as you can, all right? So let's check out the next pair. That is GBP USD for Mr. Humphrey. So GBP USD quite same, honestly. When you check out Euro USD and GBP USD, it's a similar structure going on. So I don't think I should delve into GBP USD again, because we are seeing similar structure on all of the time frames. Let's check the daily here. You can see same thing on daily, same thing on possibly 4 hours. Let's check. So Mr. Humphrey, is the same thing, the same structure on Euro USD and GBP USD. Okay, Tomabari, you have a question. I'm going to unmute you so that I can ask a question, okay? So that everybody can learn. Where are you? Okay, please unmute yourself and then ask your question. Tomabari.
Okay, good evening, everyone. So here's my question, sir. The effect of the dollar, like the DXY, that is reacting now, is it having effect on the USD? That's why the USD is buying, or is it because of? That's just the question I want to ask.
Can you ask again? Your line is breaking. I think your internet is not strong. Can you ask again?
Okay, I'm asking about the Euros USD, as in the you know that Euros USD is in up and trade down. So is it the effect of the dollar falling? As in the DXY?
Is it the effect of the DXY? Yes, yes. So you know we checked the DXY, and then the DXY is on a downtrend on daily time frame, even on a 4-hour time frame. So that means the DXY is weak. All right. So that's why on Euro USD, GBP USD, there is the uptrend is very, very strong. But like I also explained to you on DXY, let us go back to DXY so that you check that properly. Based on weekly, DXY is in a weekly demand, which I think we used TVC, I'm not sure. Okay, so we use it. So this is, let's go to the weekly chart. So we said that DXY is also in a weekly demand. All right, so we've seen price has been taking out this liquidity here, took out liquidity here, also taking out this trend line liquidity. And then ultimately price is in a demand zone on DXY on weekly. So we should also be expecting some reaction, a corrective move, because this can also be classified as one bunch of impulse, like so. So price might get somewhere here and then possibly at least give us some form of retracement and then possibly go back down. It can go back down or just keep going up. All right, so the DXY right now is what is affecting what's going on USD pairs. Hope that makes sense to my Barry. Okay. Mr. Peter is asking, how do you use Fibonacci? So Fibonacci is a whole class on its own. Maybe we would have a separate class for Fibonacci, but basically Fibonacci is simply a geometric tool that helps you measure. So check this out. Remember, I was talking to you about how a trend is. So a trend is made up of impulse move, you have the correction, and then you have another impulse. All right. So we have two major sections in a Fibonacci. A Fibonacci helps you to measure correction. This correction here, it measured correction, how far it can go, And then it also tells you when a correction happens, it gives you value for the extension. All right, so it's just a measuring tool that lets you know the end, the possible end on a correction, and then the possible end of the extension. So something like this, when you take it from the swing low to the swing high, like so. Good. So this is a retracement. All of this value here, okay, is the Fibonacci retracement levels. So there are different levels here that we use to measure retracement. And then based on Fibonacci, based on geometry, when we are in a real trend, there are some numbers which are psychological numbers. If you understand geometry as it's popularly called, is called sacred geometry. And the world is, based on numbers, really, right? So these numbers mean a whole lot. And then these numbers were not just thought of randomly, they were derived, okay? If you know how the Fibonacci sequence is from 0 to 1 to 2 to 3 to 5, like so. These numbers are levels where we found that correction seems to end. So, and then there are different zones that you want to also watch out for. There is the golden zone, which is the 50% and 0.382. Okay, so in essence, I would like to explain this to you very, very clearly so that I will not bore everybody else. I'll need at least 1 hour to really explain, to dive deep into Fibonacci and how you can obviously apply it. All right, so please look forward to that. Possibly Tentrade would have a different class for Fibonacci. Awesome. We have a long question. Mr. Sonny Patrick is asking, a little confusing, but I believe after a repeated preview, I'll be able to understand all steps and logic of this analysis. Please, sir, the video should be sent to our mails or better uploaded. Yes, it's uploaded to a YouTube channel and then sent to everybody. So ideally, Mr. Peter, if you want to take entry using Fibonacci, that means you want to deal with the retracement. My best bet is anywhere between 0.5 and 0, okay? Anywhere between those zones would be the best place to take entry. Okay, hope that makes sense. Let's check out another question. Mr. Humphrey is saying, I guess the chart pattern for DXY looks like cup and hand pattern. Possibly. So let us check out another period of time. Guys, send me some charts, some currency pairs that you are looking at for the week. Remember, we still have 2 days to go this week to trade. What should we look at for the week? Rosalind is asking, I'm always not confident in my analysis, even when I'm correct. Please help. So what gives people confidence is results. So, and how do you get confidence? Easily, just practice. All right. So practice with a demo account or practice with your live account. So you can just fund your account to maybe like $10 or $20 so that at least that's money that you can afford to lose. And then on that account, you are using just 0.01 on all your trades, okay? So when you do your analysis, take entry on that small account or a demo account, then you know if your analysis is working. And then because your money is also on the line, you'll also be able to manage your emotions properly to prepare you for when you fund a live account. Usually, I also tell people that demo accounts, practicing on demo is good, but the psychology to handle a demo account is quite different from your psychology for handling a live account, because On a demo account, your money is not on the line. But on a live account, your money is on the line. So I tell people, if you truly want to practice Forex, have a small account, maybe $10 or $20. Okay, practice on that account, and don't grow that account at least 20%, right? Before you start trading your real live account. It's like you going for a driver's license test. All right, nobody's going to give you a dummy car to practice with. All right, so they'll test you, give you a license based on you driving. You cannot drive on proxy. You have to be driving with a real car. All right, so in the same vein, when it comes to Forex trading, true tests of a trader, when it comes to practice, you want to practice with a real account, and $20 is not so much. So just do that. So that's what I recommend, Rosalind. So fund your account with little amount of money and then trade based on your analysis. When you start getting results, your confidence will increase. Then you start being confident. Okay. So Mr. Duru Divine, we should trade gold, GBP, JPY, gold. So let's check out gold, and then we'll do GBP, JPY. So we also analyzed gold on Monday, and gold actually went past the zone where we're supposed to take entry. Let us check it out. So gold price has been in a downtrend, like so. Okay, and then we can see price breaking this extreme, this lower high, and we can see price reacting at this zone here. This is a block of supply here. This is supply range, and we can see price as taking liquidity. So based on weekly, on the long run, we should expect some form of retracement here, but it might not be immediate because this is the weekly time frame. Let's go to the daily time frame and see what's going on. On daily, as you can see, price is still very much bullish on daily. Okay, and then we can see just slightly this candle closed above. So this is a proper break of structure here, like so. You can see this candle closed above this. So this is a break of structure. And so price is bullish on gold, still bullish, but overall weekly we should expect a downtrend, a correction shortly. So we are in an uptrend. So this is the next demand. So we want to be buying in a demand, right? So on gold right now, makes sense to look for price, to wait for price to trace into the zone, and then you want to wait for price, you want to buy into that zone. Okay, so I'll send you my WhatsApp if you want to reach out to me. I'll just type my WhatsApp in the chat box. So if you need any support, you can reach out to me. Okay. So this is what we have on gold. Wait for price to retrace into this block of demand here, and then over here you buy. So possibly we don't know if price would possibly want to create a higher high. If we see price retrace into this zone, so that means we're waiting for price to build its higher high or not. Another scenario that can happen is a possible shift right here. You can see price just change direction. So I'm giving you different possible scenarios because price does not necessarily have to align with your analysis. All right. So as market structure is changing, you want to always reanalyze your stand. Okay. So again, if there's one thing that you should take home from this session is that don't be so bent on your way, on your analysis. When market structure is changing, always check out market structure. Always reanalyze from time to time so that you will know if your analysis is now invalid or is still valid. So for gold, this is what I'll do on gold. I'll just wait. To be very, very honest with you, what I'll do is to wait for price to retrace into this zone, into that 1796 to 1777, maybe the 50%, and then possible buy, possibly, if price will react from here. So when price gets here, okay, your setups will also start aligning. And when price gets into this zone, please always remember the concept of liquidity grabs, okay? It happens every time in a demand zone and a supply zone. Don't be the liquidity. And if there's one thing you'd also take on is that when price is in a demand zone or a supply zone, if you cannot spot liquidity grab, possibly you are the liquidity that they will grab. So you always want to spot liquidity, wait for it to be taken out, then you take entry after that. So that will keep you in the game on the long run, and then ultimately it's going to increase your strike rate. So that's my take on gold for you. Liquidity grab on a lower time frame or on daily time frame. So when price gets here, so if I'm to trade this, for example, let me remove this. If I'm to trade this, as soon as price touches this zone, so as soon as I see a mitigation of this zone, I will now go to a lower time frame like the 30 minutes chart. So on 30 minutes chart, so let me do this. So this yellow line represents daily. So when price gets here, daily chart. So I go on lower time frame. So I'm going to use a different color now. Let me just change this. Good. So I now go on lower time frame like 30 minutes. As soon as price gets here on 30 minutes, it will look like this, something like this. I want to wait for price for people to enter the market. So you see people trying to enter the market like so. So price will go up a bit. That's on a lower time frame, like 30 minutes. But I will not be a part of the people that are taking entry, first of all. So I want to wait for liquidity to be taken out. So this liquidity right here. So you want to wait for price to come back down, grab liquidity. So it is after these people have been taken out, their stop pointing has happened, you now want to wait for opportunity to buy below this liquidity. And this is happening in a demand zone. Remember, you are only concerned about liquidity in a demand zone or a supply. Hope that makes sense, Mr. Adeni Ayodele. Okay, so on lower time frame, or this would obviously happen on lower time frame. It can also happen even on the same daily time frame. So we might have this happen also on daily, like so. Price might just, you might see a candle go up and then ultimately price will come down. Okay, this is a liquidity grab in the zone. Mr. Peter said, that is not a break of structure. Why do you think so? This is the highest. This is the highest point over here. And you can see the candlestick, the body of the candle closed above the previous high. Okay, to my own best of knowledge, that is how I define break of structure, all right? And a break of structure like so is what is validating this demand level here. You can share your views with me, Mr. Peter, so that we can learn together. Yes, please, let me unmute you. Give me a second. Yes, please unmute yourself and then speak. Mr. Peter, unmute yourself and speak. Mr. Peter, we're waiting for you.
Yeah, can
Yes.
you? Okay.
Yes, we can. We can hear you now.
Yeah, on the lower time frame, you said I need to wait for the break of structure. So that's, the liquidity grab.
Okay.
So I'm a little bit confused because when the liquidity is grabbed, it's look like a break of structure, because you said we want to wait for the market to change the structure. So I'm usually confused when to take entry, because when let's say it does like a M pattern, and then the liquidity, and then the price came back and take the liquidity, that looks like a break of structure on the lower time frame again. I don't know if you get it.
Yes, I understand you. Now, you have to put into perspective the higher time frame story that is playing out. Now, we are talking about the lower time frame because we are seeing what the higher time frame is giving us here. So the higher time frame here, price is bullish on higher time frame, like so. This is daily chart. So we're expecting price to retrace into this block of demand here. So our decision to go on the lower time frame is because of what we are seeing on the higher time frame. All right. And then you must understand that market structure on higher time frame will usually, to a large degree, override market structure on lower time frame. Okay. So that is why I said that when price gets into this zone on a lower time frame, you want to see possible reversal pattern or reversal scenario happen first at the first point of mitigation of the zone. You don't want to be a part of the people that will first take entry. You, as a trader that wants to be profitable most of the time, you want to wait for liquidation of the first point of mitigation. I hope that makes sense if I'm not confusing you. You want to wait for a liquidation of mitigation first at a demand zone or a supply zone before you look for your entry. So that's what I'm talking about. So if this happens, you are in a good trade. And then there are times that there's no liquidity grab, and price will just kick off from there and then just keep going up. It happens. All right, but more often than not, you always see a liquidity grab. So it puts you in the best position to really take entry. Are we together, guys? Mr. Peter. Mr. Denny is asking, does break of structure include the wick of candle? I'm concerned about the body of the candle. The body of the candle should break and close above the previous high in this case. All right, so let's check out the next pair because of time. How to spot liquidity. You know what? We are going to talk to Tentrade, and then we organize another advanced class, because these are concepts that personally I can explain for 1 hour. To be very honest with you, it's not something that we can learn under 5 minutes. All right, so let's check out GBP JPY real quick. So let's go to weekly. So let's delete this. What do we have here? So This is GBP/JPY on monthly, and then what do we have on monthly? We can see that our price is in a defined, very defined uptrend. The structure has shifted to an uptrend, so price is ranging up. On weekly, what do we have on weekly? We're also seeing the same uptrend play out, even though the market structure is a bit choppy, but we are still in an overall uptrend, like so. And then right now we are in a demand range entirely like this. Okay, if you take a look at this swing high and swing low, like so, this to this, okay, possibly we might still have a little bit of push to this golden zone here before price starts going up, possibly or not, okay, because this is the 3.318 zone or something like that, or 6.1. The way my fib is structured is quite different from everybody else. But this also, if this is a Fibonacci zone in markets that might also play out. Okay, but let's move forward with what I'm talking about. Let's do this. Give me a second. Let me remove all of this. So ultimately, price is in an uptrend on GBP/JPY on weekly. We are currently playing at the demand range here. Okay, so we should be looking for opportunity to buy here based on weekly. Let's go to the daily time frame. Do we have a change of structure on daily? I think so. All right, so on daily, what do we have? Seeing this internal structure, price doing this, like so. And then what can we also see on daily? This higher low was taken out by this, there's a flip zone here. Ultimately, we can see this happening and then price reacting like so, okay? So when we see this, this is a setup for a change of order flow. So possibly this bullish move wants to switch to bearish like so. So expectational order flow will tell you that we might expect price to come down and create a lower low for this move to happen. Okay, so that's based on daily, but it might happen and it might not happen. Okay, because ultimately this is also still a huge chunk of demand here. All right, so it's quite complex scenario what we have. So I wouldn't be really sure exactly what price wants to do, but if I'm taking a cue from just checking out this market structure, all right, this zone is currently, let me delete this so it's a bit clearer. Let me make this bigger for you. Good. So right now, what do we have? You have an extreme supply here, and then you can see price tapping into the supply. Remember our concept of liquidity grab. The first tap into this supply is this zone. Let me see if I can make it bigger. The first tap into this supply is this zone here. And then what do we see? The next time price came into this zone, you can see that liquidity grab. And then as soon as price took out liquidity here, you can see the swift move to the downside. This happened yesterday. You can see the swift move to the downside. All right. So possibly this might be what might give rise to the move that will create the lower low. Okay, so looking for sells here in itself is an aggressive move because the trend has not totally shifted to bearish yet. How do you know that the trend has shifted to bearish? You need this lower low to form. But right now we are still kind of anticipating the formation of this lower low. all right? So which sometimes does not work out. All right. So if you're taking entry with this kind of setup, you want to reduce your risk, excuse me, as much as possible. So now that we know that we've seen a liquidity grab here, let's go to a lower time frame and see possibly if we can find sell opportunities. Okay, let me delete all of this and make the chart clear for us. All right, so we are taking entry based off of the liquidity grab that has happened over here. So let us mark that out. We are seeing liquidity grab in this zone. So let's go to the 30 minutes chart and see what's going on. Ooh. Okay, so, and just a side note, I was telling you on Monday that a lot of us in the Forex industry now, we've kind of demonized chart patterns like heads and shoulders, like M pattern and W pattern. But what I said is that chart patterns still occur in the market week after week. So if when you start to study the concepts of liquidity and how liquidity is being grabbed, then you can now start applying it to your chart pattern entry. So the best time that you want to use an M pattern or a W pattern to take entry should be after you've spotted a liquidity grab. All right, because a lot of times when market wants to reverse, it will form W or M pattern or heads and shoulder. Okay, so in this case, you can see the liquidity grab here, and then ultimately we can see some sort of a big, M pattern like so. Classic move. All right. So this move already happened for some people that use chart patterns. You would have been in a sell since yesterday, and then you're also favored by the crazy news that happened yesterday. Okay. So we've obviously missed this move. We've missed this move. Okay, so let's see the best place that we can take entry again. I will go, let me check out the 4 hours. So what do we have on the 4 hours? On the 4 hours, let's check out the structure on 4 hours. So this is a 4-hour structure, price going like so, and this. And then what do we have? We have price take out this higher low here. Okay. So if I want to take entry, I'll take entry for a sell at a premium above the 50%. So personally, if I'll take entry on GBP JPY, because I know that price is reacting in a supply zone, we've seen a liquidity grab, then possibly we are anticipating a retracement. So we might see price still retrace into this extreme zone here, over here. So if price should do this, two things can happen, the same aggressive way of looking at it. So we might see price do this and then sell, or we can see price do this, lure people into thinking that it will sell, and then ultimately price will take out liquidity and they keep going up, possibly come down. Hope that makes sense. The person that asks for GBJPY. So where I'll look for first point of entry will be over here. Okay, but if you're always conscious of liquidity grab, you will hardly enter the wrong setup. You will hardly. Okay, if you're able to spot liquidity on time. So you wait for that to happen. And then if you also have a good entry strategy, right, that can get you into trades as early as possible, your strike rates would increase greatly. Peter is asking, so we wait for the liquidity grab, the engine of character. Yes, sir. Mr. Tumabari, don't worry, we'll create a separate class for all of these concepts. All right, let's take the last question possibly for tonight. This is to make it short, it's usually supposed to be for 1 hour. We have been here for over an hour. Okay, so let us round up, guys. So we've checked out a few pairs today. We've checked out Euro USD. We've checked out GBP USD. Partially, we've checked out gold and GBP JPY. So we've checked out 4 pairs this week. And then 4 pairs, we also checked out spotted zones that we should be looking for entry for the rest of the week. Okay, and you're also aware about the moves that will potentially happen tomorrow and Friday. Tomorrow, majorly all the pairs, all the major pairs have high impact news tomorrow. So we should also expect some crazy moves tomorrow and Friday. Mr. Denny is asking, yes, can you show me how to get the actual pips of JPY using crosshair? So I'm guessing it's MT5. Hold on, let me see if I can power up my MT5 and then show you. Guys, give me a second real quick. Then I'll answer your question, Rosalind. You're asking about FOMC. We'll check out the news right now. So I think what you do is just divide it by 10. So if your crosshair is telling you the move is, let's say 500 points, just divide it by 10. That's what you use. Is that clear? So divide the point by 10. Is the same way you do it on every other pair, on every other USD pair, every other pair apart from JPY. Is that clear, Mr. Adeni? So just divide the value, the point by 10, that'll give you the value in pips. Let's check out Crosshair is a tool on MT5 that helps you measure pip movements, pips. Is that thing that looks like a cross? Okay, so let's check out FOMC. So you should see, hold on, can you see my screen? Yes, you can. So tomorrow, what time is FOMC? FOMC is tonight on USD. What am I doing? Okay, so here's what I think is going to happen. For FOMC that is happening tonight, I don't think tonight's one is going to have a lot of action or impacts on USD, even though it's a USD pair, USD news, because this news is not coming out when the US dollar is very, very active. It's not coming out in the New York session, right? So we all know that a lot of times when USD pairs move is usually in the time frame of that currency. So let me just give you a bit of hack here. Let's go back to our chart and then do this. So we have four major trading sessions, right? Can you guys type it in the chat box? What are the 4 major sessions that we have? Let us learn this together. Give me the feedback in the chat box. What the 4 major sessions that we have? What are they? Okay, good. So we have the New York session. We have the New York. Let's start from the beginning. You have the Sydney. You have Tokyo. You have London. And then you have New York, right? Good. So you must understand that these trading sessions were coined from the active currency in that particular time. Because Sydney, that's Australia, right? They are ahead of every other continent. They are the first people to get to the new year. So their time frame is ahead of everybody. And then they are the first country to start business in the whole world. So in the Sydney session, so that's Australian pairs. You have the AUD and NZD, all right? AUD and NZD. For Tokyo, what do we have? We have just JPY. I think I'm correct. Just JPY for Tokyo. And then London, you have GBP, you have Euro, and then you have CHF, yeah, Switzerland is the 10th time frame. Then New York, you have USD, and then you have Canadian dollars, okay? So these are the major pairs, should be 8, right? 1, 2, 3, 4, 5, 6, 7, 8 pairs. Now, when you understand this concept, now, these are the currencies that are active during this time frame, during these sessions, and they're active because it is when business open in these countries, right? So they're active, all right? So if you want to trade, let's say AUD card, for example, the best time frame to look for entry on AUD card will be the session of each of the currencies. So that's AUD will be Sydney, card will be New York. So the best time frame to trade AUD card should be the Sydney session and the New York session, all right? If you are trading, card JPY, for example, card JPY, the time frame to trade card JPY has to be, the best time is the New York session and Tokyo session. So New York, right, and Tokyo. So that's how it works. So likewise, GBP USD, PUSD. So that will be London and New York. Okay. So for the FOMC, it's coming out at 10 p.m. Is it 10 p.m. my time or 10 p.m. Nigeria? Hold on. Let me confirm this properly. I'm not using 10 p.m. My time is 9 p.m. Nigerian time. So this is still in the New York session. I'm so sorry for that. So the time frame for FOMC is still in the New York session. All right. So it might actually have an impact at that particular time, but personally, I wouldn't really recommend you to be looking for entry at this time, because at this time as well, you know, spread might tend to be very, very crazy. All right. So even though it will have an effect, I don't recommend you to look for, you know, entries at this point. I wouldn't know exactly how it have an effect, but it should. I'll recommend you to look for entries, not at the extreme of when a session is going to close, but when it's about starting. The best time to usually take entry in a trading session is usually the first 3 hours of each session. That's when you get the best setups or entry. Okay, I'm so sorry, 8 p.m. Nigerian time. Okay, so I got my time zone wrong. All right. So you have 2 hours to the end of FOMC. So let's go to GBP USD then, and then see a possible move that might happen. Let's go to GBP USD. Give me a second. GBP USD. Okay, so what's the best that can happen on GBP USD? Price is still very, very bullish. All right, so this is higher high that needs to be broken. Okay, and then this is the demand zone that price possibly will get to. So 2 things can happen if there will be a serious reaction, is that we might see a break of this zone, break of this higher high, and then possible retracement into the zone for price to keep going up. All right, so that's the worst case scenario. Also, either this happens or price does not break the zone, then we'll see price come back down and grab liquidity possibly. If it's an aggressive move, price might just come down and grab liquidity. All of this trend line liquidity here. Okay, so price might come down, grab liquidity, and then possibly we see the continuation to the upside. All right, so I wouldn't know exactly what price is going to do, but right now market structure is favoring bullish. So even though news is going to happen and then it will be aggressive, a lot of times it will still favor market structure. So if there's a news does not change trends, at least to the best of my own knowledge. News does not change trend. It does not change market structure. All right. So market structure right now is still very much bullish. So if a news will occur, it will still happen within the market structure that is presented in the market. Okay. Hope that makes sense, Mr. Humphrey and Rosalind. All right. So let us call it a night. We've been here for an hour and 30 minutes possibly. Another session, our next session will be next week, Monday. So this is going to be happening every Mondays and Wednesday. Next week, Monday, ensure that you come with your questions so that we can answer your question and ensure that you are on board. Okay, you're welcome, Mr. Humphrey. Guys, give me some feedback in the chat box. If this weekly thing that we are doing is valuable to you, just type in value in the chat box. If you are getting value from this, type in value in the chat box. Let me know. Let's see. Awesome, Tomabari, that's good. Rosalind, awesome. Mr. Denny, that's good. Mr. Humphrey, that's good. All right, guys. So if you have any questions, feel free to reach out to me personally if you want. If you have any questions, or ask a question in the community, or reach out to your account officer to ask your questions, and they will give you the support that you need. Okay, guys, thanks so much for being a part of this session. I wish everybody here all the very best this week. May the markets be on your side this week. Amen. Okay, guys, good night, everybody. I'll see you next week, Monday. Bye-bye, guys.